Hi guys, this is Sana and Mona Ali here from the Property Twins. Today we are live to talk about whether you should be buying your home first or your first investment property. So only if we had a dollar for every time we get asked this question. It's a very common concern amongst first-time property buyers. And in our practice, in our mortgage broking practice and our buyer's agency, that's a common conversation we are having with people where they're wondering, they've saved up this deposit. Often people have been in this country or they've migrated to Australia and they've been saving up quite well and they want to build wealth over the long term. They're weighing up the two options. So it's a common confusion that many first-time buyers have. So guys, I guess you might be in that boat or you might have been in that boat in the past. Could you let us know in the comments on what your personal thought process has been to decide between a home first or an investment property? Or in the past, if you have made that decision, could you also share, I chose my investment property first for this reason, or I chose my home first for this reason? Yeah, and it's a conversation we are having more and more in the current climate in Australia generally, as there's more home buyers. Rents have risen significantly and people are actually wanting to move into their own home so they could start paying of their own home. That's normal part of the cycle that happens over time in the property market. So these are quite common conversations Anna's having with her clients as well. We wanted to dive into the pros and cons of two approaches. Obviously, like you'll have to make a decision of what's best suited to you. And we help our clients do that in terms of actually reviewing numbers and putting option A, option B, and see which one's actually better, and also handhold them in making that decision. But today we wanted to go through the pros and cons. So before we dive into that though, Mona, we've been through that, right? As first-time property buyers, which was 13 years ago now, nearly 14 years ago when we first started the journey. And that's the exact thing we had. Do we buy one property or do we buy two properties? Do we buy a home first or do we buy an investment property? And we landed to a decision, but we'll share that in a moment. We wanted to talk about the pros and cons of both approaches so you can make an informed decision, but ultimately it comes down to your numbers. So in terms of buying your first home rather than buying an investment property first, is first and foremost, you need to look at your lifestyle and your goals and what is it that you'd like to get out of that purchase. Lifestyle and family needs to be considered, right? It's a very emotional decision and it's important to you and your family. Where do you see yourself living? Where your future's heading? So that's the key thing, you clarifying your goals and getting that down packed and being clear in your mind. Otherwise, you keep jumping from one option to the other and not be able to make a decision. So always go back to your goals. Like what is my goal? What am I trying to achieve? And depending on the state you're buying in, there may be some first home stamp duty benefits that you may be able to tap into. So depending on the purchase price, it could be tens of thousands of dollars in savings that you don't have to build up, especially if you are eligible for any stamp duty concessions. So not all states have these stamp duty concessions, but some states in Australia offer really good benefits for first home buyers. Also, the higher loan to value ratios, right? You can put a lot smaller deposits, especially with the first home guarantee scheme, which opens up to permanent residents. Of course, there is a qualifying criteria that your income needs to be below a certain level or your family makeup needs to be certain, but people are able to get into their home with a lot less deposit, say 5% deposit on a 600K purchase, $30,000, and not pay stamp duty as well. Imagine being able to just save some extra funds towards a future investment property. So you're getting into a home with a lot less funds, and that's a positive, right? Especially if you're paying rent. It is a challenge paying rent and saving up for an owner-occupied property or an investment property for that matter. You also need to be mindful that with owner-occupied properties, especially in the current rates environment, you do get better interest rates on owner-occupied purchases as opposed to an investment property. Yep, and I'd like to add on that, say you may be able to buy one type of property. It may not be your dream home. It might be a stepping stone for you. But I've had clients who over a span of, say, for about 4 or 5 years, they've bought a property which wasn't their dream home, used that as a stepping stone, and then moved on and upgraded to a better home that they wanted to live in. That way, still ended up with two properties because their first property got converted into an investment property. So it happens over a period of time. It's not overnight. So you may want to use this as a stepping stone, obviously taking advantage of the first home buyer benefits that they may be available to you depending on where you're buying, and then getting in your first home with a smaller deposit, because investment properties generally would require a much higher deposit. So I would suggest that, with that, like, don't think that you must buy your dream home as your first home. Use that as a stepping stone.
And then with owner-occupied purchases, you need to explore the capital gains tax-free provision you have under the Australian taxation law, where you get a tax-free asset effectively that you can hold for a certain period of time. And when you sell it, you don't have to pay tax. And that's a huge positive that people consider. Another one is, let's say you've saved up $100,000 for a home or $200,000. If you use the same funds for an investment property, you don't have any tax benefits. Let's say you put 100 grand towards a 500K investment property. You have a 400K loan. On the 100K that you put towards your investment property, there's no tax benefits. But instead, if you bought a family home with the same money, it is a non-tax deductible asset. So you've put your money to good use, basically, right? And rents are on the rise. That's another thing you need to consider. In the current climate, the repayments may fluctuate and you're paying off someone else's asset as opposed to paying your own asset. So either you continue paying rent or you buy a home.
So effectively, you have no control over the rent that you are paying, right? It will go up, as we have seen, so rents have risen significantly. On the other hand, with buying your home, that, as the RBA raises rates, you may have to make higher repayments towards your home for a period of time, but it's not for an indefinite period of time. Eventually you would stop making those repayments because there's light at the end of the tunnel, whereas paying rent will be forever.
So there's a question, right, that you need to ask yourself.
Yeah, something that you need to be mindful of, and you are actually trying to make this decision, home versus investment, is, well, I have saved up, say hypothetically, $100,000. If I spend that on an investment property, and I wanted to then buy my home, how long will it take for me to save up the same amount of money? And that's, sometimes people might say it might take them a year, 2 years, 3 years. Obviously, it will depend on their resources, their job situation, where they're at in life. So you have to really consider, would I be able to build up these savings if I wanted to go buy a home, or will you be stuck having bought an investment property?
But that's with the assumption that the investment property doesn't grow in value and doesn't give you any equity. And that's where your borrowing capacity provisions or questions need to come into play, right? You may have just enough borrowing, especially in the current climate, for one property. And often what we find with clients who end up buying an investment property is 99% of the time they return and say, now actually I want a family home and I want that secure and safe place to go to call my home or decorate it. Oh, right, Mona? It's often
it's a very
very
common conversation. And
Yeah.
I've had instances where people or clients have gone down the rent vesting path and they built a portfolio, but ultimately they really desired a family home. They wanted stability. They didn't want their rents to continue rising. They wanted to be able to call a place home and have their roots somewhere. So they've had to sell off the investment properties to be able to free up their borrowing capacity to buy their home effectively. So selling properties, it's expensive to sell a property. You've obviously got agency costs. And if you've bought an investment property and you've lost the first home buyer benefit, then you go buy a home, then you'd have to pay stamp duty all over again. So it's quite expensive going down that path. And for all, depending on the markets, what if you incur a loss on the sale of an investment property in a short span of time? So you need to really weigh up if that is the right choice for you.
For us personally, we went down the path of buying our first homes with, stamp duty waivers at the time that were available. There was some first homeowners grants as well that helped a little bit. And there's different benefits today than there were 14 years ago, but very much viable as to why not do both if you're able to. You may not be able to do both today, buy a home and an investment, but position yourself to get into a home and then buy an investment. But again, it's not the right answer for everyone. And there is some downsides, right? There is no tax benefits on your owner-occupied property loan. You're not getting any tax back. Number two, if you've paid the lender's mortgage insurance, let's say you put less than 20% deposit and you've paid the lender's mortgage insurance, until the property is continues being treated as an owner occupied property, you will not get any tax benefits on that lender's mortgage insurance. So whilst we'll come to an investment side of things, how that might be beneficial to you to pay LMI on an investment. No tax benefits, no depreciation on the loan. But on the flip side, you have a family home and an emotional decision. What you need to consider is, what would my borrowing look like for one option versus the other? If I bought a home today, of course, lending keeps changing and evolving over a period of time. But today, if you were to buy a home versus an investment, would you be able to afford another property if you change your mind with one or the other? That's what you need to really question.
Really need to question that, because as I was saying earlier, if you had to sell that investment property, if you do buy an investment property and you wanted to go buy your home, it's quite expensive to do so. And if, like, more often than not, it's the borrowing capacity that holds people back then, right? And they may have built up equity in their property, but they can't move forward because they're stuck with borrowing capacity. So you need to really weigh up what path you're taking and how it actually ties in with your family's long term and your lifestyle goals.
And on the other side, right, buying an investment property first before buying a home. But I know there's a couple of questions on the live that I want to go through or comment. So Haley said, IP first because I was 26 and couldn't afford where I wanted to live at the time. So that's a valid reason, and we will come down to that shortly. Yamna is saying, what if you're not sure where you're going to live, where your job will be, but have liquid funds? Which would you choose? Well, it depends on how much liquid funds you have, right? If you have, say, 100 grand, and depending obviously on the lending option you're choosing, you can buy a 600K investment property and pay LMI. Or if, let's say, you have 300 grand, in which market you want to get in, say, for example, Sydney, right? How long will it take you to save that 100 or 300 grand? Or does it make sense to get into the market right now in a nice area where you might want to call home, even if you buy as an investment? For sure, seek tax advice on that. What does it mean to buy it as an investment first versus later?
And also, some of the affordable markets in Australia, they haven't really shown signs of slowing down. They're still in quite a bit of demand, and they will be in demand because obviously Sydney and Melbourne are so very expensive. So while property grows over a long period of time, or you need to invest for the longer term, depending on what your plans are as to when you intend on buying your home, you may want to consider, if you buy an investment, let it do its thing, but just you have to be prepared either way, that would you still have the deposit for a home later down the track, or alternatively, if you will have the borrowing capacity, because that's what most people would run into.
There's a third option, right? There's a third option where you buy in a location where you may live. You may convert that property into a home and move into that. But as I said earlier, seek tax advice on that if you're going to be buying that as an investment right now, because you have some level of uncertainty. So moving on to buying an investment property before buying a home, there's obviously positives. Say one, if you're paying lender's mortgage insurance, you can claim tax up to 5 years, but please seek tax advice on that. With investment property, generally you have tax benefits like depreciation and returns on the interest that you've paid on the loan.
And you'll obviously be deriving rental income from that property, which will assist with future borrowing capacity purposes. But part of it is also tied into the rent that you're paying, because I have seen people maybe renting where they would like to live and buying an investment property, which is a bit more affordable. However, say, you're living in Rose Bay in Sydney, just using that as an example, and paying tens of thousands of dollars in rent every year. That's not going to really support your borrowing capacities, because, the rent that you're deriving from the investment property would be far less than what the rent that you are actually paying on the place where you're residing.
Yeah, I have clients who have bought, say, registered a property off the plan. A different discussion. We are not fans of brand new off the plan properties ourselves due to high risk, but people have registered these properties and said, well, can I settle this as an investment property and continue renting where I am? But unfortunately, from a numbers perspective or a lending perspective, just doesn't work, and they have to do this as a home. But the pro is also, if numbers work for you and the borrowing works for you, you can rent where you want to live, like Haley said earlier, and invest in growth assets and invest where your resources allow or where the growth corridors are.
And I think one good thing about the investing option is that it's unemotional and it's numbers based and it's facts based and it's done taking into account your financial goals over the next 5 to 10 years. So I think that the not being emotional, I think it's a good thing, really. That may work for some people, whereas home is, a highly emotional transaction. But then on the other hand, right, there are some negatives going down the path or cons of going down the path of buying an investment property before you buy your own home. So buying an investment property first may not take into account your family and personal well-being goals. So you need to obviously sit down with your family, have a discussion, weigh up, look at the pros and cons of both approaches and make a decision accordingly. And that's something obviously we help our clients in making a decision. Well, this is how buying a home looks like. This is how buying an investment property looks like in terms of numbers, and obviously work through our client goals and see how does it fit in, like how does the lending piece fit into their goals.
Then you have tax implications, right? As I mentioned earlier, you've saved this 100 grand and you put towards an investment. There's no tax benefits on that 100K one. And two, you're buying a capital gain asset, right? You'll have to pay tax when you sell the property, unlike your family home. Unless the property was used as your home, you will have some sort of capital gains tax, and your accountant or tax advisor will be able to shed light on that, on what the rules are. And also, again, buying an investment property, you don't have any first-time property buyer benefit. In fact, you might lose all those benefits altogether with buying an investment property first as well.
So there are a number of things you need to do. If you're in this boat, wondering whether you should buy your home first or an investment property first, there's a couple of things for you to do. So what you need to do is get clarity with the numbers. How does option A look against option B? From a borrowing capacity perspective, from a funding perspective, and from a goals perspective. You do need to look at both options and weigh them up. You need to obviously look at the first home benefits that you may be missing out on if you didn't buy your home, or whether you would actually have access to any first home buyer benefits down the track. In many cases, you will lose out on the first home buyer benefits if you go down the investment path. You want to be able to look at what funds you have available right now and consider how long will it take for me to save up this money all over again.
I suggest you also seek advice around having the finance set up correctly. If you were to buy a home versus investment, say from a tax perspective, what would it mean for you? And as Mona said, how long will it take for you to save the same amount of money all over again? But with how we do things in our practice for our client, we ensure that finance is set up correctly upfront. So you pay off the home loan fast and then save tax on the investment property. That's a smarter way of doing it, and then minimize risk as you go along, because especially if you are planning on buying more than one property, you also want to make sure that not exposing yourself to high risk structures like cross collateralization. Ultimately, what we've seen with our clients, we've helped them move from one property to the next and the one after that, even if they've started with their first home or first investment property, and going along the way minimizing risk and saving tax.
Yep, it's a lot about structuring, getting the right finance structure in place, considering borrowing capacity of one option versus the other. And in our conversations with our clients, we work through all of that with them in helping them make the most informed choice, because it is a big decision, probably the most expensive decision you would make in your life. So you need to make sure that you have all the facts available to you and you make an informed decision as a result. This is Sharik had a question. What if someone buys their first home as owner-occupied and second as investment property and convert the two to investment properties? I'm not entirely sure if I understand the question.
I think Sharik saying swapping the two around. So you'll have to seek tax advice on that. Also, there are lending implications where the lender would want your loan to convert owner-occupied to investment or investment to owner-occupied or vice versa, depending on your decision. Obviously, the lenders have their ways of finding that out. You've seen that happen. The interest rates are different for both. And then you also need to consider, is the loan set up correctly? So you pay off your home first, whichever property you end up making your home should be paid off first, because again, there's no benefit, right? There's no tax benefits in not paying your home off.
We've had clients who've moved from one property to the next. It comes down to the lending strategy. So we've had clients who bought their first home and then upgraded to another home. So it's about running the numbers and looking at different scenarios and making a decision accordingly. And Yamna's asks, I've heard instances where the loan is structured for investment, but but keeping the property empty for a few months so you get the first home buyer benefits, is that even legal or advisable? You'd have to check the local regulations where you're buying, really. You'd have to check the regulations of how long you need to live in the property.
An Office of State Revenue, you don't want them come knocking on your door. I mean, some people have changed their minds as to what they'll treat the property as and have gone and paid the stamp duty, and that's okay too. But as to keeping it empty, that will be a discussion you need to have with OSR, Office of State Revenue, in the state that you're buying in. And I think it's also buying as an investment. Yes, any lender would push for it to be bought as an investment. If you're not living in that city, you can't buy it as an owner occupied anyway. But that's not to say you won't change your mind. And actually, you won't get the first home buyer benefits if you're not living in that city. If you're not there yet, if you haven't moved yet, or if you don't have an employer letter to suggest you're moving there, you will not be able to get first home buyer benefits, I don't think. It's a conveyancer or solicitor question as well on what checks and balances the Office of State Revenue goes through to determine that.
So if you are confused or in research phase and looking at, should I buy my home first or an investment property first, which is common confusion amongst first time buyers, we'd be happy to have a chat with you to see how you could move forward with your goals, help you clarify that goal, and talk about your longer term goals when it comes to investing in property as well. Because the fact that you're confused suggests to me that you do intend on expanding your portfolio and not just stop at that one property. You do want to build your wealth and get the financial security, stability, and financial freedom down the track. So we help our clients do that through correct loan structuring. And if you'd like to talk a bit more about it and go through the figures and numbers with us, you can schedule a time with us on meetme.so/property twins. Sirat will be popping a link in the comments below so you can access our diaries there.
Thanks, guys. We'll catch up soon.
Thank you.
Thanks.
Bye.
Bye.